September was another interesting month during which the Dukascopy Research team conducted a poll among 30 professors. But how different are their economic outlooks for Asia-Pacific, North America, and Europe? Well, let's find out with the latest results of the Dukascopy Bank Sentiment Index. This month, Professor Yusaf Akbar from Central European University talks to us to provide his interpretation of the survey findings. Professor, thanks for your time. To start off, the mood indicator has shown improvement for all of the three key economic regions, with Europe reaching the record high sentiment for the 6-month prospects of 0.49. Apart from seeing an improvement in the Dukascopy Bank Sentiment Index, Europe's Economic Sentiment Indicator, released by the European Commission, has also ameliorated and now stands above its average for the first time since July 2011. Professor, taking into account the positive sentiment, do you think it is finally safe to say that Europe is on its way to a stable recovery, or do you think the positive prospects are premature and there are still severe threats ahead?
Well, you can never predict the future completely, as we'll come to later on when we talk about the situation in the United States right now. Of course, it looks as if the things are turning around. That's not surprising. It's taken a while to get here, and a lot of it is still driven by the relative robustness of the German economy and the fact that that neighboring countries still rely upon German demand for their exports. So, assuming that Germany continues to grow at the current rate, given the fact that Angela Merkel has been re-elected, I think that in the short to medium term, by medium term I mean up to 2 years, I think we're okay. But the situation across the Atlantic could also have a potentially serious impact on Europe, whether Europe's involved in it or not.
Moving on to the second part of our discussion, the economic development stages, according to the obtained poll data, academic experts support the view that the North American economy will be expanding both in 6 months and 3 years from now. However, during the last Federal Open Market Committee meeting, the Fed lowered its growth expectations and anticipates a slowdown in 2016, with the growth ranging from 2.5% to 3.3%. Considering the recent events with the US government shutdown, Professor, how do you expect this to impact the US growth forecasts? And do you see the effect spreading to other regions?
First, let's sort of deal with what the Federal Reserve is suggesting, a growth ranging from 2.5 to 3.3. I think that's extraordinarily optimistic. As ever, I mean, how many times do you see monetary authorities having to revise down their growth figures after the event? Don't forget, 2016 is also an election year, so there's also a certain amount of politicking going on there in terms of sort of setting up the election for the Democrat candidate in 2016. So, to answer your questions, we know that the US government shutdown has sort of 2 effects. Obviously, the first effect is the direct impact of reduced government expenditure for the economy, right? So the government stops spending money, which means aggregate demand goes down, right? Second effect, of course, is the impact on people who are made out of work or temporarily out of work because of the shutdown. They stop spending. I mean, if you think about the size of the US military and the size of the Pentagon, you think about the tens of thousands of contractors who are now currently not being paid because of the government shutdown. That's obviously going to impact the US economy if this continues on. And then, of course, we have October 17th, my birthday, ironically, where if there isn't an increase in this bizarre concept of a debt limit, which only the US has, every other parliamentary democracy I'm familiar with doesn't do this, if no agreement is arrived there, there's all kinds of predictions about what could happen. Will the financial markets run because for the first time in American history, the so-called riskless asset, the US Treasury bond, is no longer riskless or perceived to be? Or will, as some other people are suggesting, simply a matter of, well, if the US government's taking in $280 billion a month in income taxes, they can use that to pay the approximately $100 billion a month on interest payments on the Treasury bonds. I think the issue is going to be how long this lasts. We're into week 2, and now both sides are kind of sort of playing a game of chicken. Yesterday, President Obama said, well, I think the Republicans have enough votes if you combine Democrat votes in the House of Representatives to get a vote to get this unbelievably six-week budget, which is just extraordinary. And of course, the Speaker of the House, John Boehner, is denying this, right? So we'll see what happens. We've got another week to go. October 17th appears to be the next kind of psychological deadline. In fact, in terms of the impact on other places, again, it's purely dependent on how long this goes on. And if there is this kind of fright in the financial markets about the US debt default, then obviously the impact could be catastrophic. We've never seen this before in modern times.
As the final point, the 6-month and 3 economic outlook graphs indicate the progression of the sentiment for the last 5 months for Europe, Asia-Pacific, North America, and for the overall global outlook. Professor, out of the 3 mentioned regions, do you see any region having a greater importance than the others, and thus a stronger influence on the global forecasts?
Very good question. I've always been a proponent of the view of decoupling between the Western Hemisphere and the Eastern Hemisphere post-2008 financial meltdown. Therefore, I think what goes on in Asia is going to have a profound impact on the world economy. We've seen some astonishing news in India recently with growth forecasts reduced to 4%. Even though the sentiment index suggests that Asia of all the 3 regions is going to do the best, I think there's still a lot of uncertainty, and I think that uncertainty is going to drive a lot what goes on in the world economy for the next short while.
Professor Akbar, many thanks for your participation in this month's poll, and great to hear your comments. As to our viewers, be sure to go to Dukascopy.com and select Sentiment Index under the Market Research section, as the full analytical product can be found online. Tune in next month for the latest release of the Sentiment Index. Until then, goodbye.